So this is Hall Martin with the Investor Connect program. Today we're here with Vaughn Blake of Autochrome VC. Blake, thank you for joining us.
Yeah, no problem. Thanks for having me. I'll really appreciate it.
Well, great, great. Well, I've been looking at Autochrome for a while and found that to be a really interesting model you have there for venture capital. Maybe you can tell us more about it.
Absolutely, yeah. I launched Autochrome Ventures in January of 2016. Our focus is what I've sort of nominalized as applied frontier. So we look for the industrial or enterprise applications of frontier technologies, frontier and emerging technologies. So your deeper tech. For example, applied AI and ML, immersive computing, some space tech, gene editing, and with CRISPR technology, and also try and target about 50% underrepresented founders, underrepresentation related to ethnicity, gender, and geography.
So you're focusing on the latest technologies, but you're also focusing on perhaps underserved sectors in those technologies. How did you come to that investment thesis?
Well, I think early stage venture is very, very difficult, as most investors know. And a couple of reasons. One, I felt like sort of narrowing my focus really allows me to weed out basically any investment outside of my circle of competence. I've got a great support team around me, PhDs in ML and machine learning, some folks that have been in the private space industry for 15 plus years. And sort of, having that team around me really allows me to sort of zero in and focus on, the opportunities that I think both have the biggest potential upside, that are truly global in their nature. And also, sort of steers me away from things that may look from the shiny object, so to speak, sort of from the consumer plays that might have a lot of eyeballs, but are going to be hard to monetize or turn to revenue down the road, or sort of SaaS businesses that start out with a few great customers, but they're relationship based, and it turns out their customer acquisition strategy doesn't scale. Along with that, the thing that I really enjoy about working with frontier and sort of emerging tech founders is they're generally very highly technical people. That sort of risk is significantly reduced when you're dealing with folks that have PhDs or rocket scientists. So being able to check that box when you're going through diligence, when you're looking at team, product, and market, and that the team has the capability from a technical standpoint, at the end of the day, just it makes my job as an investor a little bit easier. And sort of similarly, with the underrepresented founders, it's tough. I mean, being a founder is very difficult, as we all know. Being a successful entrepreneur takes a lot of grit, takes a lot of resilience, and folks that are generally coming from underrepresented backgrounds have had to deal with more adversity. So there's sort of an inborn resilience in many of the female founders that I've known, those that I've backed, and those that I haven't, those that come from underrepresented ethnicities as well, and then certainly there's insight to be gained from growing up outside of the bubbles of Silicon Valley, of New York, of Los Angeles. There's one of my best performing companies is from Denver, Colorado.
Well, it sounds like you're a little different from other venture groups in the sense that most groups, bring on enough partners that have the domain expertise to make decisions. It sounds like you've created a close-in network of people, although outside the VC fund, to help you determine what the right technologies and the right advisement might be for going after these companies. How did you build that network?
Yeah, Tinder started out early as a founder, and as a founder and on the operations side, you're in the dirt, you're in the muck. You can really connect with people that are sort of struggling and going through the same day-to-day issues that you are, the ups and the downs and the highs and the lows. And through my early days as a founder, my network just really expanded. Was able to meet other entrepreneurs. Through other entrepreneurs, was able to meet other investors, and that just sort of built and built. And along with that, I had grew up around a great group of people. My father was an investment banker and private equity guy. My mother is a professor, so I had sort of a mixture of faculty brats and finance geeks growing up, and that friendship network has served me well as times progressed, and sort of I've always been a super curious guy, so I've a lot of those who I lean on within my network, really for the most part, almost all of them started out as friends and just really interested in private space. And one of my friends went to the International Space University right after getting his master's at Hopkins. Stayed in touch with him, helped him with some political activities that he was doing. And as I moved into venture and as I really decided, hey, frontier tech is something that I think has the highest potential for return as well as the highest potential for impact. We started talking. It was casual at first, and then he provided so much value and was so helpful. I brought him on an official capacity, and been able to do that with 5 other folks. And we sort of leverage the power, the collective power of each other's networks, and it's been pretty successful thus far.
Well, it sounds like an interesting intersection of the academia world, the fintech world, and also the startup world coming together, where you have deal flow, you have deep dive info on the technology, and then you have connections into the financial world for deal structure, etc. So it looks like a very interesting mixture you have there for giving you a different insight into what's going on. How do you source deals through the startup world?
Well, yeah, I think again, first and foremost, you have to build a network of investors, of other investors that you either connect with personally, connect with in terms of your sector, or may have come across just through conferences and all that jazz. So I get a lot of deal flow from other investors. I mean, I'd say my favorite source of deal flow is through entrepreneurs. So through my portfolio company CEOs or folks that I've known for a while that have been in operation for the last 5-10 years, various startups. Those folks reach out. I was also lucky enough before I started the fund, I worked for a company called Flash Funders, and Flash Funders is an equity crowdfunding platform, and I was lucky enough to be a managing director there and to really help the platform in terms of a deal sourcing apparatus. And that really allowed me to go all over the country and meet with angel groups, meet with investors, meet with burgeoning startup communities, outside of the Silicon Valleys of the world, which has really provided me with incredible amount of value from a deal flow perspective, as well as from just an insight perspective. Because there's a lot of groupthink, I think, up in the valley. I think that LA's ecosystem is certainly maturing, and it will take on sort of its own manifestations of groupthink as well. But for me, I just I like to hear other people's ideas. I like to know what's going on all over, and sort of I think being open to having an open ear and really taking other folks seriously, and also investing outside of those areas really gives you you'd be surprised that your reputation, I think my reputation generally precedes me, and people understand that I'm that I'm pretty helpful and I'm open-minded, and as a result I've been able to harness deal flow from not just up north, but pretty much all over.
So do you lead the deals, or do you follow, or do you do both, or how do you manage that process?
Yeah, I mean, I will lead. I've written the first check into probably 4 or 5 of Autochrome One, that portfolio out of the 22 company investments that we made. But I'm happy to co-invest as well. I mean, at the pre-seed level, where I most generally invest pre-seed and seed. I mean, and sort of any blurring between those 2 stages. It's really about that. There's much more to it than the capital, and a lot of it can be, that even an angel at the stage that we invest can provide significant amount of value in terms of, opening a door or some sort of strategic advice if the angel has a particular, industry or domain expertise. And then, there's a group of probably, 5 or 6 other frontier emerging technology investors that are early stage that I feel like we've all invested in each other's deals in one way or another, and that's helpful. And sometimes it's good to co-invest with folks that are on the ground as well.
Well, that's great. That's great. So, what is your position in these companies? How much do you normally invest on the first round? How much do you invest on follow-on rounds and that type of thing? How do you approach that?
Yeah. So for Fund One, it was a small, essentially an angel fund. So we were putting in $100,000 checks, $50,000 to $150,000 checks, somewhere in that range. Now with Fund Two, we'll be taking slightly larger positions. It's a larger fund. Our target check size is in the $250,000 to $500,000 range.
Okay. And then how much do you normally reserve for follow-ons in these cases?
Yeah, so with Fund Two, we're going to reserve about 40% of the fund for follow-on. It's difficult when you're dealing with like some elements of the emerging slash frontier technology landscape. Are going to be capital intensive, and at some level down the road, we're probably going to be too small of a fund to continue following on. That's why we try and get in early as possible, as early as viably possible, and try and hold on to a larger equity piece from the beginning. With knowledge that even as you follow on, there's a chance that there's some of these companies might go to Series F financing, and it'll be tough to maintain pro rata that late in the game. But that's part of the reason why we try and get in as early as possible.
Well, I was wondering about that because some of the technologies were, especially the deep dive ones, can get expensive fast.
Mm-hmm.
Machine learning and AI and those things usually get pretty expensive. And so I understand now you're getting in early, getting a stake, but you're probably not going to be taking it the whole way as some groups do, but because they're so expensive. But that explains that part of it for sure. Well, of all the technologies you mentioned, which one are you most excited about today?
So I'm really excited about quantum machine learning. I think that that's going to unlock a lot of value, both in terms of some defense applications, but mostly within the climate space. I'm spending more and more time and trying to get smarter and smarter around sort of software-enabled clean technology solutions. I think it's one absolutely essential in order for us to sort of stay alive here on the planet. And also, I find it, tremendously intriguing and interesting. So I'm going to be looking closer and closer around. I mean, anything related to, whether it's data-driven energy storage management, or climate modeling. Things around that area. That's very exciting. It's still very early, but I think we're on the cusp of unlocking some true value and some pretty significant impact.
Well, with the recent hurricanes that have hit the U.S., it seems like that's going to come higher on the agenda list with some of the modeling going on, and with the melting of the polar ice caps, that's starting to gain a lot of attention as well because there's now economic implications of that. Now that you can transverse the Arctic by water, it
Yeah.
changes the
Yes.
dynamics quite a bit of the environment and extracting resources, transportation of goods. It really is a game changer in a big way now that that's happening, and so it's interesting to see the technologies that model that as well.
Absolutely.
Well, cool. Well, what else would you like to share about your fund and the model that you have going there that people should know about?
Yeah, I think the most interesting thing about us is we're really open to sitting down with folks that are really early stage, that are in some cases pre-product. That's the where I think we can provide the most value, and that's also where I think there's a bit of a gap in the contemporary venture landscape. I think there are a few pre-seed funds that are popping up. Precursor up in SF, Brooklyn Bridge out in New York, Notation out in New York. Down here, there are a couple as well, but we're really trying to become sort of warriors within that space, folks that really can get behind early stage, really truly early stage founders, help them with hiring, help them with strategy, help them prepare for their next round of financing, and get things off the ground early, especially within technologies that seem initially challenging, and sort of visions that are, as I mentioned before, truly global in their nature. I'm bringing on a partner for this fund who's actually he's the former CEO of, or he still is the CEO and will soon be the chairman of a company that I invested in out of Fund One. His name is Adrian Walker, and he is an ex-Ford engineer, a specialist in AI. His first company, Senator, is AI for the logistics and manufacturing sector. So a true sort of expression of our thesis, which is this applied frontier theme. And we're just really excited to get started, and to help folks that have grand visions, have the technical chops, and are early stage.
Well, that's great description there. What's the best way for listeners to get in touch with you? Website, LinkedIn, or what's the best way?
Yeah, LinkedIn. I'm on Twitter as well. Feel free to shoot me a DM or to at me on Twitter. LinkedIn is also great. I'm very open to accepting invitations and always down for a good chat.
Well, good. Well, I appreciate you taking time, Vaughn, to share your information about Autochrome with us today, and hope to have you back for a follow-on discussion in some of these areas we've just touched on today.
Would absolutely love to. Hall, thanks a lot for reaching out. It's been a pleasure.